Welcome, this is Siwin Yi. At this time, I would like to share my screen and go over what Blacknight, the data mining company, has addressed this week, right? And Blacknight's August 2022 mortgage monitor. Home prices down again in August, with average home nationally now 2% off the June peak, and inventory growth stalls a seller step back. Okay, according to the Blacknight Home Price Index, which is HPI, the median home prices fell 0.98% in August. And in July and August of 2022 marked the largest single month price declines seen since January 2009. It ranked among the 8 largest on record. Some of you may painfully recall that we just gone through an epic historic housing crash back in 2008. So a few months later, January 2009, we are seeing the residual effect of the largest housing crash in 2008, and the largest one occurred in 1929. So those are the only crash that occurred in the past 100 years. So with that in mind, on historical basis, well, we're in good hands. I mean, only 2 housing crashes in the past 100 years. So the statistics is on our side. So for those of you who are expecting a housing crash this time around, this is a completely different scenario. And I'm not going to go over details because I've addressed this kind of topics in past videos. You can search for my YouTube channels on those topics about why real estate is not crashing at this time. Anyway, let's continue with this very current information and article by Blacknight. And it goes on to say that after rising sharply from May through July 2022, for sale inventory levels stalled in August, growing at just 1/10 the rate of recent months. Sellers appear to take a step back from the market. Obviously, the sellers at this time, most of them are not in a position to move up because they are locked in on a mortgage rate of 4% or less. Why would they want to move up to a higher price property at almost 7%, which is mind-boggling crazy? Their payments could be at least more than 50 to 70% higher if they move up, if they finance a move up property at 7% interest rate, which is insane. So the national inventory deficit held relatively steady at minus 44%, with the market remaining more than 600,000 listings short as compared to pre-pandemic levels. So during normal healthy market back in 2019 and prior, there were a lot more homes for sale. So as a result of the past 10 years of low construction, low supply of homes, that we're seeing once again that we are selling at way less, almost more than 500,000 homes listings short than to create a healthy market. So we are seeing an impending epic housing shortage. You know what that means, right? In the past 2 years, during the pandemic, 2020 into the early part of 2021, at 3% interest rate, at this low level inventory, we have seen a massive historical home prices rise and bidding wars and multiple offers, the whole 9 yards. So the only thing that are stopping us is the interest rate. Instead of 3%, it's 7%. See, that's what it takes. The Federal Reserve, really control the market. It controls people's emotions. It controls consumers' behaviors. All right. So sellers are likely being deterred by both falling demand and prices, along with growing desensitive to giving up historical low rates mortgages in a sharply rising rate environment, obviously. So July and August month-to-month declines marked the largest contraction seen in more than 13 years. I just mentioned that since 2009, which is right after the market, the real estate crash in 2008. So, and then of course, July and August, once again, is the largest single month price decline since January 29, and it represent 2 straight months of significant pullbacks after more than 2 years of record-breaking growth. And back in winter of 2008, 2008 followed the Lehman Brothers bankruptcy and subsequent financial crisis. That was the largest two months decline, July, August, month to month, since 2008. Many of you will painfully remember that. Historically low inventory, along with record low interest rates, was one of the key drivers behind the U.S. home prices, seeing essentially a decade worth of appreciation in just 2.5 years, right? I mean, it all depends on what markets. Markets like Boise, Idaho, and Austin, Texas, in the past 2 years have seen 50, 60, 70% price increases in the past 2 years in certain neighborhood, right? So that's, you know what I'm talking about. Yep. This type of appreciation usually take more than a decade to achieve, and we did it in a matter of 2 years. So amazing, historic, and never should have will happen again. So back then we climbed from a historic low 1.7 month for sale inventory prior to this year to currently around 3.1 month supply of inventory. So we have almost 100% gain inventory from the historic low from last year, and still a very, very low, obviously, 600,000 listings short of a normal pre-pandemic level. So sellers, some may be waiting out the market to see if demand and prices return in spring. So the sellers, the way they are thinking, unless the interest rate environment or drastically gets better, gets lowered, unless the economy and the buyer demand comes back, they will sitting on their low fixed rate mortgages and they have no incentive to sell. So sellers not selling, builders not building, and buyers can't afford to buy right now due to higher interest rate. As a result, many buyers out there of primary homes will remain at historically unaffordable, a 38-year low in affordability since 1980s. That was the last time home prices was that unaffordable. And also, at the time, record-setting 34.3% payment to income ratio normally. Then, with the rise in interest rate recently to 6.7, as of September 29th, it has become, the payment to income ratio has increased to 38.2% of the median household income is needed to make the principal and interest payment on the medium price home purchase. The largest share since December 84, when the mortgage rates were 13.2%. Yes, back then, almost, how long? Almost 40 years ago, the mortgage fixed rate interest were 13%. Some of you are too young to remember that. If you ask your parents, your baby boomer generation parents, they tell you that part of I think toward the latter part of 1981, the mortgage interest rate went all the way up to 18%. And even at that time, there was no recession. It was sort of a normal market. So some of you, complain, oh, 6.7% is very high. Well, not on a historical basis. It seems like high right now because you guys are, I would say, spoiled by the low historical rate, and you can't fathom the sudden rise from 3.5% earlier this year to 6.7% right now. So there's a sticker shock, and a lot of you out there most likely are just taking a pause with just taking a break. You guys are taking a break to position or stay in the sidelines. Hopefully things will improve. I don't blame you. At the same time, some of you it's fine. You can afford it. You can afford to pay the higher mortgage payment. You can afford the purchase price because you have good income. You want to, you want to buy in a certain area. You want to stay in that community for long term. There's nothing wrong for you to buy, even at a higher interest rate. But the philosophy is you date the interest rate, but you marry the house. Okay, some of you may have heard this kind of a corny terminology lately, but date the interest rate because you can always refinance later if and when the interest rate decreases. Meanwhile, you you able to buy the house, you lock it in at the fixed rate mortgage. You can enjoy hopefully long-term wealth building if you buy early. So another philosophy is buy real estate and wait instead of wait to buy real estate. So we have, you have to determine each one of you out there, each individual and each family out there, you have to decide for yourself whether you want to buy real estate and wait as opposed to wait to buy real estate. So it's a case-by-case basis. You make the decisions based on hard data, based on scientific evidence, based on past history, as I'm telling you right now, but do not buy or sell based on emotions, based on fear of missing out, based on fear of losing out, those kind of things. So make an informed, educated decision to buy and to sell, and not panic, not stressed out, not use emotions to make your decisions. That's all I have to say. So with that said, I think the takeaway from this Blacknight report is that, yeah, we have seen a lot of negativity around. All these are short-term data. It's not a trend that will indicate any kind of crash is going to happen. So, the decrease, sounds very, very scary. The headlines stating, oh, Blacknight said in July and August 2022, we have seen the biggest price drop from month to month since 2009. I know it's a big headline, but you have to take into perspective. You have to read deeper. You have to dig deeper into each article. Even this one, I'm preparing for you. So just take a step back and analyze all the data, and just make your decision accordingly. What's right for you. So that's all I have to say. And if you see value in this video, please click the like button and subscribe to my channel. And also, finally, please provide your email into my website below. So if you want to become a free member of our real estate organization, of our real estate community, so you will receive your email inbox on a daily basis information about real estate investing, and in a way that you could become very successful. You can avoid all this doom and gloom and all this the sky is falling scenarios out there. It's not that bad. It's just my personal opinion. As long as you're very disciplined, you invest for the long term. If you're a home buyer, right, buy if you could afford it, you feel comfortable about your finances. If you're a real estate investor, that you have to focus on a specific market, which is, you could say it's a boring market. You go to a boring market with a low affordable market area, mainly in the South and Southeast, and you buy where the numbers make sense, where you can cash flow. Hopefully you will surround yourself with a team of people that can help you, especially professional property management. Thank you so much. This is Siren Yi, and look forward to seeing you on our next video on our weekly updates on many aspects of real estate housing market. Thank you so much for listening. Have a nice day. Bye-bye.